Hey, good morning. This is Julie, J Auto Trading Strategies. It is September 1st, Thursday, and we're following up with crude after that huge sell-off following the EIA report showed that there was 3 times supply build in the market for U.S. consumption. I think that number is erroneous myself, so I'm not really as gung-ho on this now that I've thought about it, and can talk to you about that for just a second. They are assuming the assumption behind that figure that the U.S. consumption was weaker than originally thought because of an increase in exports, which greatly surprises me because one has nothing to do with the other. Congress now has allowed us to export our products to anywhere in the world, China, and what we're exporting has nothing to do with U.S. consumption. So yes, it's all a production number, but it needs to be put in a separate category. And what the supply build did is they said that because we had more exports, that diminished the U.S. consumption figure. And I don't know why they're grouping them together, but my initial thought is that number could be misleading. But what about these figures and numbers and assumptions aren't misleading? You know, everything about oil is misleading. The production figures in Saudi Arabia are totally erroneous and misleading. Saudi Arabia and Iran tried to jawbone up the price of crude, so I'm just not sure what to make of all of this. The daily chart, I'll show you that, has a floor, some support at 43.12, I think, if I can remember from yesterday. This chart's populating and I'll show it to you. Give it one quick second. And right now we have momentum divergence on this big drawdown move yesterday. Hold on, here we go. 43.12, yep. Okay, so here's our support on the daily, and initially we broke through the downtrend, but now we've broken back through that, so we're ranging technically between 43.12 and 46.75. The weekly does show a little bit more ominous view of crude, where this could easily get back down to 40, and that's what I was seeing yesterday when I first saw this 3-time the supply glut figure on the consumption, and that it was before I took into consideration that they were mixing in the exports into that figure that they published. So I'm not so bearish now after having thought this through. And if my chart will populate, there it goes. This is what I'm talking about. The price came right up to my trend line and is inflected and is now making a second bounce down. So and here's where I said, you know, this is easily going to get back to 40 because it's coming right to it. 39.82. But I'm not so sure now. Because of my understanding of what that number that they're publishing, it seems a little bit weak to me, the assumptions behind that figure, because the way that they combine those exports into the U.S. consumption figure. We had gasoline sales that are fine, so I wouldn't be surprised that this does come back and fill the 61.8 retracement, getting back up to the prior breakout level today. The middle, there is a hole, a donut in the volume profile, and the 61.8 is at the bottom of that hole. So I'm thinking that the bottom of this 1 hour initial balance is going to get retested, which is sitting on the open. So that's in the top of that donut. So a very big target that says, here, this is where you want to come, to all the traders to fill that in. So be careful if you get, right now we're in a range. As you see, we are still in the downtrend on my higher time frame. So we have trend, counter trend. So we're still in the trend. We have not broken above the 4508, which is sitting at the PPOC. So that's another very, very high target area. The PPOC sitting above the yesterday close. So watch out for an initial rundown for a stop run to flush out these stops. Sitting down here. I don't think it's going to make it down to S1. If it flushes these stops and then bounces back, this is where it's going to go, right there, past yesterday close, going up to the PPOC. And once up there, it could very well do that, or just continue falling at this point to get the S1. So we are in light volume. We're in a range now. We're no longer trending. We're ranging. So be very careful trading, because price can do anything in the range. And normally what you do in a range, you buy the bottom and you sell the top. So if it does, break out of this range, the range would be continuing to move lower and not retrace back up, then it is definitely going to be going for S1. I would give it 10 ticks or at least 5 ticks off this bottom before getting short for S1. But because of this divergence, I'm just not feeling a big push down to S1 at this time. And we'll be watching my short-term charts on how to trade this, just to show you, once you have a big trend like yesterday and you're in your higher time frame and you're like, how do I get in? I can't chase, and there's no pullbacks. This is exactly what I'm talking about, taking it down to a lower time frame chart. So from 9 o'clock in the morning yesterday on, You knock it down to a smaller time frame, and you set yourself up to take any one of these in a big trend day. Just take your ticks. So this is Julie, J Auto Trading Strategies. It is going to be a mixed day in the markets. I think we're in a transitory day going into non-farm payrolls. This will be my last recording until Tuesday next week. I'm going on vacation and preparing for the big start of my trading week next week. So be careful trading crude. We're ranging and likely to do some stop flushing. So if you do want to counter trend trade this, I would wait for price to get down into the 44.45 area, 44.40, and then wait for a bounce back up, and that way you can put it on inflections long or reversals long and take them. But otherwise, keep it on your shorts so that you can take a higher probability trade once a market is trending. Right now we are not trending, we are ranging, so no trading really for my strategy until it makes a decision on what it's going to do. We could just go ahead and fill this gap without even flushing these stops, but very low probability trade right now in the middle of a range. It's like you don't want to touch that with a 10-foot pole, because it's likely to make that gap run, come down here, flush these stops, and then come back up. Who knows what it's going to do? So just wait, give yourself some time for the market to decide what it's going to do, and then use your market analyzer, as much as possible. Find a market that is trending, like the British pound. Start taking those trades. The gas is still trending. Nikkei, as always, trending. The NQ's trending up. So, but just be careful for NFP tomorrow, and be aware that there is divergence big time on this crude trade. So I'm looking for a gap run and then possibly coming back up in here for a larger retracement. Y'all have a great weekend, and be safe.